Hey guys, it is Mark Coe for the 4th of April. Just wanted to take a look at how the week's gone, let you guys know some of the activity we've seen. So let's start with euro dollar. And really from the late fall into now, we've been focused on bottom edge dips, and euro has been really unable to bounce, but what it's been able to do is continue to maintain this bottom edge. For whatever small moves have been there, we've been able to capture the zones again, bottom edge. So we were looking at the most recent bottom edge down to 1177. We traded down to 1184s this week. Again, all on buy long bias, so everybody was pointed that direction in our room, and for whatever was there, 60 ticks higher, we were able to be involved. So that was euro dollar. Pound dollar. Now pound dollar's gone back and forth with bias, and certainly been able to do so. What it has not been able to do is break away from the zone. So bottom edge has been maintained. Now this is again February 22nd puts in bottom edge. March 8th, March 11th, test bottom edge. March 29th, retest bottom edge. It's all been for the taking. It's all been areas to be long against. Within that, we've seen several opportunities at short-term 30-minute buy signals that have been able to help capture some of this upward movement. Again, top edge was put in late February, retested just prior to middle of March, and that's held ever since. So the volatility we have seen, we've been able to capture a lot of that setup, either long or short, but the preference has been to be long at bottom edges. That has been the maintained bias since I think it's going back to late fall, maybe October, November. We have maintained that long bias in pound dollar. So there was a period there where we were still stopped out of longs and were able to get back long in the low 126, 127 area to ride that up in through the first quarter of 19. So that was good. But this is just a look at what it's done over the last few weeks. Um, Gold markets today. What have gold markets done? Well, gold, the bottom edge we're playing in gold has continued to be challenged. It was challenged again today, actually broke on a 4-hour basis and came right back. So again, I call this phenomenon rejection, which means you try a new level, you're not able to maintain it, so it has now rejected that level. Comes back and still maintains this long zone. And again, just so you get an idea of how far back this goes, this is gold. We're just looking at a 4-hour chart, so this takes us back to January. So again, the January bottoms serves to propel it up to the highs we saw in February, comes back down, tests the exact same area, right? This is us, buy signal with a 1 count, 1290s. 1290s trades 1330s. That's a $4,000 per contract move, or another way to say it is 400 tick move, 4,000 per contract. Now it comes short signal at 1330s, trades right back to 1290. So again, $8,000 of up and then a down move right back to same level, and we are still working at buy side. As long as we're above this 1288, 90 area, we are still working buy side in gold. So that's gold market. Dollar yen. Dollar yen has traded better over the last couple weeks. It's been long bias, but you see again what it's stalling up against. So this is what the zones can really do for you. Understand where you should look to encounter resistance or support, and look what's going on here. So dollar yen is able to break away from the 111.70s, trades down to 109.70s, which consequently we were long side from this zone. Right, there were two areas down there, 110 and a quarter, and then all the way down to the 109.70 area. Right in here from February, trades right to it and then rallies. But on the rally, you see where it's stalled, right? Again at the stall point. So all these are the concepts I teach in the class and in the course. But you'll be able to see that. If you guys haven't been able to check out the course and want to do so, I know we're going to do a price increase here relatively soon. But to get signed up, compassfx.com/peak50. It still maintains that price for a $500 subscription for 12 months. So I think it's a great deal. Finally, E-minis. E-minis have been a really, really nice volatile type of market. And what we've seen for the better part of this week is more of a bullish E-mini. And only in the last 2 days we've seen some minor resistance come in around the 28.85 area. We've probed for some sell action up here and just haven't gotten a whole lot of resolution. But there have been some tradable opportunities because the E-minis have been able to give you 8 to 10 point movements off the top, and then we've seen some buy signals come in off the bottom. And I'll just show you, for example, what some buy signal would look like. We saw one today. So this is late Wednesday afternoon's bottom edge. We're simply pulling price across. There you see your buy signal kind of mid-afternoon today in the E-minis, and it's not massive, but it's a 6-7 point move off of that level, further off of the bottom edge. So there are some short-term opportunities. Again, you have the wherewithal to be able to spot the opportunities that exist to you. And then I know I said finally, but we'll just take a look at crude oil. Crude oil, much like the E-minis, has been sell side for us the last 2 days. You're seeing better resolution to the downside here in crude oil than you're seeing in the E-minis. But we basically went sell side to start Wednesday morning, traded back just shy of that zone today, and looking to test that even lower as we come into Thursday afternoon. So as I said, guys, love to have you check us out in the class. Get signed up. Here's your sign up. It's compassfx.com/peak50. And hope we'll see you on Sunday morning for our weekly brief session, and hope you guys are grabbing some of these moves that are out there. It's been pretty good stuff. So cheers, guys, and I hope everybody had a great week.